Okay, imagine losing your family home and your personal savings because your company failed to pay taxes. Now, HMRC is ramping up its efforts to issue something called personal liability notices, or PLNs for short, and it's putting UK directors of insolvent companies at very serious risk of being made personally liable for unpaid company taxes. Now, today we're going to be breaking down what is a personal liability notice, how it can actually affect a director, most importantly, what you can do to avoid one. So if you're a UK company director right now, 2024, this is essential information that you need to know. My name, remember, Chris Worden. Welcome back to the Director First YouTube channel. What we do here is we make UK insolvency and corporate finance issues easy to understand. Today's topic, personal liability notices, and it's a big one for company directors, especially those whose businesses are struggling or potentially heading towards insolvency. Now, there's a recent report done by Pinsent Masons, and it shows that HMRC is increasingly targeting directors with these things called personal liability notices. Now, the worrying thing is the average personal liability notice that was dished out was £290,000. So that's enough to make most directors take a sharp intake of breath. So in today's video, I'm going to cover what a personal liability notice is, how HMRC use it, what joint and several liability means for directors, how you can avoid receiving a PLN, and what you can do if you're already facing one. It's going to be a detailed breakdown, so stay with me as we explore everything you need to know about personal liability notices. So, what exactly is a personal liability notice? A PLN is essentially a legal notice issued by HMRC that makes a limited company director personally responsible for unpaid taxes, even if the limited company has gone into liquidation. Now, under normal circumstances, a company's debts are separate from its directors, but a personal liability notice cuts through that protection. So, when can HMRC issue a personal liability notice? Well, they issue it under Section 121C of the Social Security Administration Act of 1992, for the statos out there. But a PLN is typically issued when HMRC believes that fraud or serious neglect by a director of a company has led to an underpayment of contributions such as national insurance or other tax liabilities, VAT, corporation tax. You know, in short, a PLN is a very powerful tool that allows HMRC to pursue personal assets of directors, and that can be the savings or even their family properties to recover unpaid taxes. Now, the question is, why are these PLNs becoming more common? You know, they've been around for a long time, but they're becoming more prevalent because of the rise in company insolvencies and the growing tax gap that we have in the UK. And the tax gap is the difference between the amount of tax owed and the amount actually collected. Now, in the year 2022 to 2023, that figure was £40 billion. Now, many businesses that go insolvent, they will leave behind substantial unpaid tax bills. VAT, PAYE, corporation tax. HMRC is increasingly using these PLNs to claw some of that back directly from directors. Now, here are some key stats to keep in mind from this Pinsent Masons report. Now, there were 52 joint and several liability notices issued last year. That's a 225% increase on the year before. And the average collected from a director was 290 grand. In the previous year, there were 16 PLNs. That equated to just over 2.3 million. Now that figure this year, they believe they'll get in is 15 million. Now, okay, let's have a look at this. These are fairly small numbers when you consider how many insolvencies are going on. But I think the important thing is seeing how they've jumped up from 15 the year previous and a 225% increase. Now, obviously, the Labour government have been saying, you know, there's these big black holes. They're going to be wanting to look for quick and easy wins. So don't be surprised if these numbers continue to rise. Now, the increase is part of HMRC's crackdown on people who are leaving unpaid tax liabilities after the shutdown. So what you might want to understand is what triggers a PLN. Why would HMRC decide to actually issue one against you? So here are some common scenarios, right? Number one is a failure to pay tax liabilities on time. So if your company is consistently failing to pay its taxes, HMRC might see this as a sign of neglect, especially if other creditors like suppliers or banks are getting paid first, okay? That one's fairly unlikely. Second case is more common, and this is when they suspect a director of fraud or serious neglect. So a PLN will be issued when HMRC thinks, listen, this director has been committing fraud, or there's consistent serial levels of neglect from the directors. And it could include things like falsifying records or deliberately avoiding tax payments, like running a company for years and years, never paying, and then putting the business into liquidation. If they believe that it's been premeditated, there could be a PLN on its way to you. Third scenario is where preference payments are made to connected parties. So what that means is, if a company prioritised payments to connected parties, such as the director or the director's families, over tax liabilities, HMRC could basically take the view that this is an attempt to evade those taxes. Another scenario where a PLN could be coming your way is if you've got previous history with other companies. You know, if a director has been involved in multiple companies that failed to pay the tax obligations, especially in the case of like Phoenix companies or pre-pack, where a new company is created out of a failed one. You know, I get it mentioned all the time of people. Chris, I know this guy who's done this 10 times. He just runs up tax bills, liquidates and starts again. Well, okay, that might be the case. But for those people who are serial offenders, I'm talking to you, that you're the people that these personal liability notices are going to be coming for, and they're very, very serious. Another scenario is obviously these Phoenix companies. So a Phoenix company is one that arises out of the collapse of a previous company. You've heard me talking about it. It's called a pre-pack, often has the same directors. The revenue are particularly strict on these cases if they suspect deliberate attempts to escape liabilities while continuing the same business under a different name. Now, I want to talk to you about joint and several liability notices, because these PLNs are often issued alongside joint and several liability notices. And this means that more than one person can be held personally responsible for the company's unpaid tax. Example, let's say a business has multiple directors. HMRC can issue a joint and several liability notice to all of them. And this means that each director is individually responsible for the full amount of unpaid taxes. And HMRC can pursue any one of them for the entire sum. If one director doesn't have the resources to pay, HMRC can go after the other one. So if you've got two directors, one's got lots of property, lots of cash, lots of savings, the other one hasn't got anything, HMRC can almost ignore the one that's skint and go after the one that's got some assets. Now, they're going to be issued in cases of tax avoidance or evasion or repeated insolvency. Remember, listen, if you've acted properly, your business has just come to an end, you've done everything in the right manner and you liquidate, this video is not for you. This video is for those people who have continually done this, continually gaming the system. Now, HMRC's ability to collect unpaid taxes has been broadened even after a company has been liquidated. And this is what I want to put across to you, okay? A lot of the time, this is going to come to you after you've gone through an insolvency. So how can you avoid a personal liability notice? Okay? Because most of the directors I speak to are really honest people. Their business, for whatever reason, has come to an end and they've become insolvent. Now, when your business starts to struggle, there are steps that you can take to reduce the risk of receiving one of these PLNs. The first thing, and I bang on about this a lot, is take early action. If you're facing financial difficulties, don't wait till it's too late. If you are in a time to pay with your HMRC and you can't make your next payment, if you're continually robbing Peter to pay Paul, if sales have gone down while costs have gone up, you're insolvent. You know, seek professional advice as soon as possible. Early intervention could help you restructure company debts and avoid insolvency altogether. Or you might want to look at some type of insolvency process. The sooner you take advice, the better the outcome, not just to you, but to everybody else. Another thing I want to talk is about keeping tax payments a priority. You know, making sure that companies' tax liabilities are always a top priority. Paying HMRC in time is critical, even if other creditors are putting pressure on you. Now, if you continually delay paying HMRC, you could raise red flags. This is what I suggest that people do. When you have let's say you have an invoice, £1,000 plus VAT. The 200 quid on the £1,000, it's not yours. The HMRC are asking you to collect it and pay it out to them. So what we do here is, that 200 quid we put in a separate account. We use Starling and we have these things called spaces, dead easy to set up. And you put the 200 quid in the Starling in the space. And what we do with the £1,000 that's left, we put another 150 quid in another space or another account that's going to be to pay our corporation tax when it's due. So then I know out of that money, there's about 850 quid to play with in the business, okay? It's really, really important you use some of these strategies, because I've been there. Listen, I've been there when I'm spending the VAT. I've been there when I'm spending the corporation tax. I've been there thinking that's all my dough. And then out of nowhere, another VAT bill comes, and then another corporation tax comes, and I'm thinking, oh my God, where's all my money? Because I've managed it poorly. Listen, another thing you need to be doing is document everything. Keep detailed records of any financial decisions you make during a company becoming insolvent, you know. Even if that's just an email from one director to another, or an email to yourself as to why you're doing something. Because if HMRC investigates your company's tax history, you're going to need to demonstrate that you're acting responsibly and you didn't intentionally avoid paying taxes. Another thing that I see people getting tripped up with all the time is preferential payments. Do not make payments to connected parties such as you, the director, or family members before paying tax liabilities. I mean, if you must make these payments, ensure that they're justifiable and in line with what's required. You know, have you got the money, have you got the profit in the company to make this payment? You know, seek professional help with taxes. If your company has a complicated tax structure or is struggling to manage the tax payments to the HMRC, it might be worth speaking to somebody like us who can help you restructure with the HMRC, navigate any complexities of any tax compliance. Now, one of the things, if you've got a dreaded personal liability notice, you're going to be frightened. You know, it's really serious. You've got to act quickly. You know, literally, the minute that comes to you, as soon as you receive it, you need to speak to a legal professional. There's people that I can introduce you to who specialise in tax law and in insolvency, and then they can help you understand the notice and advise you on the best course of action. Because sometimes it might be possible to challenge the notice or actually negotiate with HMRC. Now, I see people getting these things and they just freeze, you know, like they're a rabbit in the headlights. You're probably not well equipped to go into bat with them. You need a professional on your side. You know, make sure you review the details of the notice. Make sure that it contains all the relevant details, including the reasons for the issuance and the tax liabilities involved. Is it right? You know, if there's any errors or inconsistencies, that could be grounds for actually challenging the actual notice. You know, you could consider an appeal. You might be able to appeal the notice if you believe it was issued incorrectly or unfairly. And these appeals, they need to be made within a specific time frame. So again, it's crucial that you act quickly. Please don't go into ostrich mode, bury your head in the sand and think that this is going to disappear. You know, you could negotiate a payment plan on something like this. In some cases, it might be possible to negotiate a plan with HMRC to basically settle that liability over time, rather than paying the full amount up front. And that will just give you a bit of breathing space to get your stuff together and get it paid over a period of time. Now, if you get an issue with these personal liability notices and the HMRC have got grounds, you need to prepare for losing some personal assets. Because if you can't challenge or negotiate the notice, HMRC might pursue your family home, your savings. You know, it's really, really serious, this. And in extreme cases, they're gonna make you bankrupt. So it's essential that you get the right advice early. I mean, listen, I'm going to wrap the video up. The rise in these personal liability notices and joint and several liability notices, right? What's happening here, okay, is although the figures are small right now, comparative to how many insolvencies are happening, the jump from last year to this year says to me that there's more and more of these that are coming out. Now, for you as a director, if you've behaved properly, if you've done everything right, but you've racked up some HMRC arrears, it happens. 99% of the jobs I have, in fact, you know what? 100% of the jobs that I have today and that I've worked on over the years, they have HMRC arrears. This video is not applicable to probably 95% of the people out there, but the key to this is you've got to take advice early. Please, please, if you've enjoyed my video, like the video, subscribe to my channel, give us a comment, and if you need some free and independent advice, give me a call. Chris Worden, Director First. Thank you.